Here's a really powerful way to play earnings. We're in earnings report season right now. I'm looking at a chart of Netflix, and you can see Netflix has very large moves during earnings report. So here was the earnings report back in of October in 2014. You can see a very large gap here, and you can see here even in early 2015 at the time of earnings release there was also a fairly large gap. And now the recent earnings report only this week in on the April 16th, we can see a very large gap in Netflix as well. I want to show you how I played this trade because it's a very high probability trade and you can potentially make some very nice profit. Let me switch over to another chart so I can show you what happened during the day of this particular bar, because this is the daily chart. I want to talk to you about this trade using an intraday chart. So let me switch over to another platform where I can see intraday data. Here is a chart of Netflix looking at each bar is 15 minutes. Now here you can see this is the previous day. And you can see the very large gap once Netflix released earnings. Earnings release was actually on the Thursday, the 16th of April, after market close. So we would only see this move on the next morning when the market opened. Now, generally when a market makes a big move like this, then that move is followed through in that direction over the next couple of days. And what I did here essentially was I waited for at least the first half hour, maybe first 45 minutes to let the market settle before I entered this trade. And once I started to see this consolidation, then that's a fairly strong bullish pattern where you have a large gap up and you can see a couple of bars to the upside, and then you see this consolidation pattern. Very high probability that the stock would continue in the direction of the major trend with this gap up. So what I actually did, rather than buy the stock and rather than actually buy a call option, which is what I normally do, but because there was such a large gap, the options were quite expensive, so instead of buying the options, I actually sold some put options, which basically also profit with a move to the upside. Remember, I'm selling put options in this case, so selling a put option is a way to also profit with a potential increase in the underlying market. Now, I sold the put options just below this area, so I think they were the 542 put. Let me switch over so I can show you the actual options that I actually use. So here we sold the 542.50 put at the time when Netflix was in this consolidation pattern during the day. So this trade was an intraday trade. You have to be obviously awake. In my time, that's about 1 a.m. in the morning here in Sydney. So normally my trading is done when the market's closed. I usually put on my positions automatically, work them all out on a Saturday or during the week after market close. But this earnings strategy requires you to be awake, when the market's open. Of course, if you're in the US, then it's a lot easier because it's early morning trading. So by selling the 542 put option, the position basically profits so long as Netflix stays above the sold put option. So in this case, 542. Now I had a stop loss level where in my trade plan basically dictated for me. The trade plan basically said if Netflix traded below 540, I would exit the trade. But we can see Netflix remained strong for most of the day, and those options that I sold decayed in value because the stock moved up. So over the course of the day, the put option that I sold it for $515, and I did 11 contracts. And I didn't sell these naked. I also bought some protection in case the market dropped. So at any point when you're selling options, you need to have another option to help you. You need to buy some options as well in case the market drops. So this is quite an advanced strategy. I don't have enough time to go through all the makings of it, but I just want to show you that there are other ways to make money with earnings reports using options. In this case, selling options was the most favorable technique, because by selling the option, I actually profit so long as the market, in this case Netflix, stays above a certain level. So in this case, so long as Netflix stayed above this 540 level, I was able to take a profit. So it's a very different strategy, because I don't have to set any targets. It's not really a directional play. It's more of a way to take advantage of the options decaying. And of course, because the options, I only used options that had only 1 or 2 days left in options expiry, they therefore decay a lot quicker. So not only do I advantage with the decay in time, but I also advantage with a quick move up in Netflix. So in this case, I bought 11 contracts. The total investment required was around $5,000. Now, because I sold options, I brought in a bit over $2,000 of income, and therefore my maximum risk on this trade was $3,278. Now, if you look at this, it's actually a very powerful technique, because the way that I can actually win on this trade is, well, if you think about the market can move up, down, or sideways. Now, for me, in this case, I actually profit so long as the market could remain going sideways and stay sideways above 540, or the market can continue to go up, as in this case, and I also profit. So I can profit, I can profit 2 times out of 3 market movements. So I can profit so long as the market goes sideways. I can profit so long as the market moves up, and the market only moves up, down, or sideways. So 2 out of 3 movements I can actually profit. Bit hard to explain that, but I hope that you do actually get what I'm trying to say. So what I really also want to identify here, that was a nice close to 70% return on investment in just a couple of days. So very powerful and a very high probability trade. And I don't think it's a fairly high risk. Now, of course, I've purchased 11 contracts, and anyone can reduce that amount of contracts to reduce that max risk. So for me, I was comfortable with this risk and able to lock in a nice $2,000 profit, or just a bit over $2,000 profit in just a few days, and result of 67.79% return on investment in just a couple of days in Netflix for our earnings play. High probability, because the stock needs to either go sideways or up, and because of this gap, in my experience, in most cases, the stock continues to move, and we can see the stock has remained above 540, so allowing the options that I sold to completely decay in value, allowing me to completely keep that premium of $2,222. So I hope that makes sense, folks. Happy trading, and always know your risk and always manage your risk accordingly.